Okay, so today is 9th April 2025 and let's try to understand today's market with the help of ChatGPT. Okay, so as I have told you before as well that you can use ChatGPT for your personal needs as well and for your professional needs as well. If you need any information which is historical or which is very old, you can get that kind of information as well. If you have, if you want to know something about recent events, then you can know about the recent events as well. Okay, so I have opened chat gpt here and I will write here something like, let's try to understand today's stock market. Okay, so once again see, because it is a recent thing which I am doing here, so it is searching the net. Okay, so on April 9, 2025, the Indian stock market experienced a downturn influenced by global trade tensions and domestic monetary policy adjustments. Okay, the Bombay Stock Exchange Sensex declined by 0.51%, closing at 73,847.15 points. Source name MarketWatch. The Nifty 50 fell by 0.67%, ending at 22,399.15 points. Sectoral highlights. IT sector, Nifty IT index dropped by 3%, with companies like Wipro and Infosys experiencing significant losses. Okay. Public sector, PSU, the Nifty PSU bank index also faced pressure, reflecting broader market apprehensions. Okay. The Nifty energy index declined, with NTPC limited shares slipping by 1.19% to close at 348.75 rupees. Okay, then we have auto and FMCG. These sectors showed resilience. Okay, so there was some resilience in these sectors with marginal gains observed despite the overall market downturn. Okay, now what are the key influencing factors? So we know global trade tensions. US imposed a 104% tariff on Chinese goods, prompting China to retaliate with 84% tariff on US imports. This escalation has unsettled global market, including India's. Okay, so that is here. Now, this is a major factor given by ChatGPT to us. RBI monetary policies. The RBI reduced the repo rate by 25 basis points to 6% and shifted its stance to accommodative to bolster economic growth amid external pressures. Okay, now what is the investor sentiment? We can know that as well. The combination of escalating trade wars and domestic policy shifts has led to cautious investor behavior. While the RBI's rate cut aims to stimulate growth, prevailing global uncertainties continue to influence market dynamics. Okay, see, these are the resources from where it is giving its information. Okay, now let's say we want to know more about this point here, global trade tensions. Okay, so what I will write here, please explain your first key influencers, key influencing factor, which was global trade tensions in detail. Okay, in detail here, along with full history of why it is happening. As I told you that because it is just like your friend, ChatGPT is like your friend, so you can ask it anything along with full history of why it is happening. So just like you communicate with your normal friend, you can communicate with ChatGPT as well. So sure, let's dive into the global trade tensions that are currently shaking markets, especially the US-China trade war, which has deep historical roots and major implications globally, including for India stock market. Okay, so here we have, so what happened recently? Okay, key influencing factor, global trade tension. What happened recently? As of April 2025, the US imposed a 104% tariff on certain Chinese imports, triggering a retaliatory 84% tariff by China on US goods. This sharp escalation in trade barriers reignited fears of global economic slowdown, hurting investor confidence across major markets, including India. But to understand this properly, let's rewind a bit. So it is going to give me history here. Okay, so historical timeline. So it is giving me a lot more history from 1990s here. Okay, origin, trade imbalance and intellectual property 1990s to 2000. Okay, the US has long accused China of unfair trade practices, including huge trade surpluses. China exports way more to the US than it imports. Okay, alleged theft of intellectual property and forced tech transfer from US companies operating in China. Heavy subsidies to Chinese state-owned companies. These tensions simmered quietly for years under the surface. Then the next part, Trump era escalation. So from 2018 to 2020. 2018 President Donald Trump launched a full-blown trade war, citing unfair trade and national security risk. Okay, tariff imposed on 250 plus billion dollars worth of Chinese goods. Okay, China retaliated with its own tariffs. Global market reached violently. Supply chains were disrupted. The IMF and World Bank issued growth warnings. 2020, a phase 1 trade deal was signed. China promised to increase US imports but didn't fully meet those targets. Then comes COVID-19 era, COVID-19 era polling 2020 to 2022. Focus shifted from trade to public health and stimulus efforts. Trade tensions calmed slightly through tariff remained in place. Then Biden administration and tech decoupling 2021 to 2024. President Joe Biden kept most tariffs but shifted tone to focus on alliances and technology control. Key steps: blocking advanced semiconductor exports to China, banning US investments in Chinese AI and quantum sectors. China responded with its own restrictions on rare earth minerals and chip materials. So that is what happened during 2021 to 2024. Then reignition in 2025, election year, moves and nationalism. In 2025, amid a US election year, pressure mounted to appear tough on China. The US sharply increased tariffs, possibly due to political populism, supply chain security, accusation of cyber espionage, and unfair industrial policy. China responded within days, citing economic caution and raised its own tariff. So, why it matters globally? Higher tariffs means higher prices for consumers and businesses. Global supply chain for electronics, automotives, etc. are disrupted. Investors' confidence drops, market fall nationwide, worldwide, sorry, market fall worldwide. Export heavy sectors, especially in India like IT pharma, become vulnerable to sentiment driven sell offs. How it hit India today? Nifty IT dropped 3% due to fears of reduced global tech demand and tighter margins. Sensex and Nifty broadly declined as investors pulled back from risk. The RBI cut interest rates in response, but global factors weighed heavier. Okay, so there are some cut rates from RBI, but still the global factors are more dominant. So that is here. Okay, and see, that is how you are able to see that why market fall today. Okay, what are the main reasons it fall today? Okay, because of this particular reason here, global trade tensions, the US imposed 104% tariff, okay, on Chinese goods. So that is here, that is the market update for today, 9th April 2025.